So welcome everyone to our small business webinar series. My name is Sahara Lake and I'm the programs manager with the Tory Burch Foundation. Before we get started, I would like to thank our sponsor, Campaign Monitor, which is a global technology company focused on email marketing. They make this series possible and we really just want to thank them for their support. Our speaker today is actually a returning presenter and a friend of the foundation. So we are really excited to welcome Tricia Taitt, who is the founder, CEO, and CFO of The Art of Money Matters, which is an outsourced CFO firm providing accounting, financial consulting, back office support for growth-minded small businesses. Tricia is also a member of our 2021 cohort of fellows. And so we are really excited that Tricia is here with us today to talk about the systems to help you thrive during your first year in business. For those of you who have not joined us before, there will be Q&A after Tricia's presentation today. So please, throughout the presentation, use the Q&A box, and the team will be managing that, and we will try our best to get to as many of those questions as possible. We will also be recording this webinar and posting it on our YouTube channel later today. So with that housekeeping, I want to hand it over to Tricia.
Hi, everyone. It is wonderful to be with you today. I'm excited to talk about financials and numbers, of course, because it's something that I love and I'm passionate about, as well as dance. So I've been a professional dancer also for many years. For those of you who are artists and performers out there, hello and howdy. So today we are going to talk about the first year of financials. When I put this together, I thought of all of the clients that I've worked with, that I typically work with, that have been in business many, many years. And I thought about all of the things and the challenges and the problems that they have experienced over the past few years. And so I wanted to have this conversation with you with that in mind, how to set up and basically build a strong financial foundation for success. Now, I believe that every small business owner deserves to be financially free and deserves to have their business support their personal financial goals. I believe that every business owner deserves to be financially savvy and feel confident talking about their numbers. And I also believe that all business owners, whether you have a finance degree, an MBA, or you do not, deserves to engage in a wonderful, happy relationship with their numbers. With that intention, I started my company 6 years ago after working 10 years on Wall Street as a finance professional. And when I work with my clients, that is my intention too. If they leave me, of course, being more profitable and growing their business, but if they leave our engagement being smarter around their numbers, understanding their business performance, and able to read some spreadsheets and feel good about it, then I feel like I have done my job. So most of my clients tend to be 6, 7, 8-figure businesses, and they have been in business a very long time. But I have found that a lot of them have similar challenges. And the challenge is that the financial part of their business is usually the weakest part of the business. And so with that in mind, I took away a number of their mistakes that I've seen them make. And I wanted to speak to those of you who are in your first few years of business, tell you about the ways to sort of lay this foundation so that you can advance smarter and avoid some of the pitfalls that a lot of them have experienced. And one of the major things that a lot of business owners forget, even though you're wearing so many hats, you're doing the marketing, you're doing the admin, you're out there doing business development and sales, you're doing the actual client work. One of the things that most small business owners forget is that they are the CFO, the Chief Financial Officer of their business and of their life. I want you to let that sink in for a little bit. You have a fiduciary responsibility to make sure that you are okay and living comfortably, but also to make sure that your business is running at peak performance. And even if you hire someone like myself and outsource this role of chief financial officer, as a good business advisor told me, when you're a CEO, you can outsource 80% of what you do, but you always should keep your eye on the other 20%. You should always be keeping your eyes on the numbers and then how the business is performing. So according to the US Bureau of Labor Statistics, 45% of new businesses fail within the first 5 years. And according to the same bureau, 20% of new businesses fail within the first 2 years. And the main reason is they experience a lot of financial hurdles. What does that mean? Some businesses experience lack of funding, lack of access to capital, not generating enough sales, but even more important than that is generating the sales and not being able to manage the cash flow in the background well. So all of these different financial challenges build up to one of the main reasons that a lot of businesses fail within the first 5 years. Now, I believe that in order to have a financially successful business, there are 5 key pillars or 5 main ingredients to laying a strong foundation. And I'm actually going to use a dance metaphor here. So for those of you who are performers out there and athletes, you know, in order to be at peak performance and execute on the main stage, you need to have a strong core. And then everything emanates from there. So in the same way, businesses need to have a strong financial core in order to grow and scale at peak performance. So today I'm going to talk about the five ingredients for a strong financial foundation. And that includes having the right structure, having sales, generating sales, bringing that money in the door, having strategy behind your approach to sales, having a system for tracking, and support. So let's dive into it. But before we dive into it, I just want to read the temperature in the room. All of you who are here, drop this in the chat. Where are you hailing from and how long have you been in business? If you drop that in the chat, drop that in the comments. I'd love to know where you're from and how long you've been in business. That would give me a great idea for this conversation, how to frame and tweak this conversation. All right, we have some people that are 5 years. I am hailing from Queens, New York. So for all of you from New York, hail to you. Alabama, South Carolina, Florida, Virginia, Ohio. I love it. 2 weeks in business. God bless you for being here. Congratulations on being here. How about that? You were smart enough to know that you needed a workshop and a webinar like this. Just a few months, 2 years, 7 years. So love that. I'm glad that we have a number of people here that run the gamut, because some of these things may be new to some of you, and some of these things you may have heard, but sometimes it takes a couple of times to hear the same thing for you to actually get the conversation. And I know for many people, having a financial conversation is not always an easy thing. So we're going to dive right in. Thank you for sharing. All right, so number 1, making sure you have the right structure in place. All right, so there are a number of different structures that, and by structure, I mean systems and processes. There are a number of different structures that you should have in place as a small business owner, but I'm going to touch on a few key ones for those of you who are in your first few years of business. The first thing is to establish your business as a separate entity. Whether you feel like you're a freelancer or you're still working a main job and you just started this business, it's important to establish your company as a separate entity. And I don't just mean create a DBA, which is a doing business as or assumed name. I mean establishing single member LLC, LLP, S Corp, C Corporation. These are all different legal entities. If you want to understand the difference between each of them, have a conversation with an attorney, a small business attorney, and also speak to your certified public accountant that does your taxes to figure out what is the right entity for your business and for your life. Setting up a separate business entity also helps you establish credibility out there in the marketplace. If you want to be known as a founder, as a CEO, you want to make sure that your business is set up that way. It is also helpful if ever there were any issues within your business and a client has a grievance with you, the legal entity provides protection between your business and you and your personal assets. Along with establishing a separate business entity, you should also make sure that your personal money and your business money are not commingled. This may seem like a very sort of rudimentary kind of recommendation, but I've seen it many times before, because just mentally we think, especially if we're sole proprietors, that the money is all coming in, so it's all ours anyway at the end of the day. But no, if you have a business and you set it up as a legal entity, you need to treat it like a separate entity, which means that the money is coming into a business bank account. And in order to pay yourself as the owner, you transfer money from the business bank account into your personal bank account. That also sets up a habit, or establishes a habit of you paying yourself maybe bi-monthly, bi-weekly, or once a month. So I usually recommend people who are starting out in their business to have at least an operating account, so business checking, a business savings, so that you're parking about 20 to 30% of your income on a monthly basis into this separate account, so that you have money stashed away for savings and also for tax purposes to pay your estimated quarterly taxes. Right? As your business grows, you might add one or two more accounts just to separate your monies, but at least start off with a business checking account and a business savings account. Also establish a business credit card separate from your personal credit card, so that you put all your business transactions on that credit card. It allows for a couple of things. One, when you set up a business credit profile and you build that history over time, eventually you'll be able to apply for loan, line of credit, and all other funding solely through your business without having to personally guarantee it. Right? So just like you're building up your personal credit profile and your personal credit score, your business can also have a credit profile and a credit score that is managed by Dun & Bradstreet. You would apply for a DUNS number under Dun & Bradstreet and manage your credit profile there. But one of the easiest ways to start establishing that is to have a business credit card. The other important thing around having a business credit card and a separate business bank account is that you'll be able to track the ins and outs of your business and kind of at a glance see what your position is at any given time. And then the third reason for having a separate business bank account and credit card is that during tax time, or if you have a bookkeeper, they're doing the bookkeeping, at least all you have to give them are your business bank statements and your business credit cards, so that they credit card statements, so that they know how to account for your business transactions, and you're not having to sort through receipts, and you're not having to sort through a separation or a difference between your personal stuff and your business stuff. So keep all of your business stuff separate from your personal stuff. The second set of structures I want to talk to you about are setting up ways to receive and pay out money. So if you're a product-based business, you probably have set up something like Shopify, and Shopify allows you to receive payments through third-party merchants like PayPal or like Stripe. There's also Square. There are many different financial technologies or ways to receive payment. If you are a service-based business and you're having to send out an invoice, some of the most popular systems are QuickBooks, Wave, and FreshBooks, right? So those systems, by using those systems to send out invoices, it also tracks who hasn't paid you on time, right? You also need to keep an eye on that, especially if you're a service-based business. In order to make payments to vendors or independent contractors, you can use systems like PayPal for business, Venmo for business, and even using an accounting system like QuickBooks where you can write a check. Now, I will tell you, I have seen businesses that have been around 5-10 years. Actually just took on a client where they were paying people with Cash App Venmo, Zelle. Now, I know those platforms are easy to use and you use it for personal transactions, but they are not appropriate for business transactions. And actually, in the past couple of years, those companies have been cracking down on people using these personal platforms for business transactions. And the response to it has been companies like PayPal and like Venmo have created different plans called like Venmo for Business or PayPal for Business, where they set it up so that you can manage business related transactions. Now, they would charge a transaction fee, of course, like anything else. When you charge with a credit card or pay with a credit card, there's a transaction fee, but it is a better way of reporting so that you also stay out of trouble. If you're ever audited, you want to make sure that you are using the right platforms for your business transactions. If you are paying a vendor, 1099 contractor, as you're growing your business, you might add to your team using 1099s. Make sure that you have a contract with them, and before you pay them, give them a form W-9 to fill out and complete. Giving somebody a form W-9 and getting it before you make the first payment will save you so much headache during tax time, because then you don't have to go chasing them for information in order to give them 1099s at the end of the year. Now, if you are in the stage where you're about to hire your first employee, now that requires very different setup. I do want to make a very important point here. A lot of times I see business owners misclassify contractors as employees. It has nothing to do with the $600 rule, whereby you give 1099s to independent contractors who you've paid $600 or more. That is independent contractors. The IRS is very clear in their guidelines on irs.gov of how you determine a contractor from an employee. This is a huge mistake that I see many business owners. I have seen a six-figure tax bill from a client who misclassified employees, and they owed back payroll taxes, penalties, and interest. It is the one thing that you do not want to mess with when it comes to managing your business. So if you're about to set up employees for the first time, you can speak to an employment lawyer, but one of the main things you want to do is you want to register with the government, register with the IRS and with the state, get an employer registration number, right? So that you can start repaying payroll taxes to the federal government, to the state, to the city, right? There's an additional cost you take on when you start paying employees besides salary. You also have to get certain insurances, disability insurance, workers' comp, and all those other things. But really speak to an HR professional or an employment attorney, or even payroll service providers in order to set up accepting or having or paying employees. I could talk about that, but then we won't get to the end of this presentation. And then the last set of systems and processes that you should set up if you're in your first few years of business, to register with the state, to remit sales tax. If you're a product-based business, you need to set up or register with the state in order to collect sales tax and then remit that sales tax back to the state agencies. Also, make sure you're paying your estimated quarterly taxes. I believe that comes up March or April, May, September, and then June of the following year. The IRS can charge a penalty if you pay less than the required amount required. You find out from your CPA certified public accountant or your tax person what that minimum amount is. But I think it's also important, when I told you about having a business checking account and a business savings account, and stashing away 20 to 30% of your monthly income in this account, is so that you have enough money to start to pay some estimated quarterly taxes. From a management standpoint, I tend to start paying quarterly taxes like around June, because at least that you're halfway through the year and you have a little bit of a sense of how much income you'll have, and probably on average how much you might owe. And that will probably be a good time mid-year to have a conversation with your CPA. Biggest mistake is just to have one conversation with the CPA at the end of the year. You should be talking to them about quarterly, probably semi-annually throughout the year. And the last very important structure and system to set up is financial record keeping. Keeping all of your information organized so you don't feel messy and out of control in one place. You can start off with Excel, but then graduate to a system like QuickBooks or Wave or Xero. One point, super important. To set up any of these systems, I know they make it feel like it's so user-friendly, but I have come into so many QuickBooks and it looks like a mess because no one with accounting background helped the business owner set it up properly from the very beginning. So if you're starting to set up those systems, I know a lot of us are part of DIY University and DIY culture, and you want to learn all the things and all the parts of your business, and you can YouTube anything to death. But I would highly recommend that you have someone that knows accounting set up your accounting systems first and train you on it a little bit before you try to start to take it over yourself, until you start to outsource it to someone like a bookkeeper, and a bookkeeper that knows accounting, not just any old bookkeeper, a bookkeeper that knows accounting. So those are some of the structured systems processes to set up your first couple of years in business. So let's get into ingredient number 2 for having a strong foundation for success. It requires sales. Well, actually more than sales, it requires profits as well. So every time I prospect a client, I like to ask the question, what is your biggest financial challenge or frustration? And what do you think they said? I want you to drop in the chat. What do you think most business owners say is their biggest financial challenge or frustration? I want you to drop those things in there. I see some wonderful friends in the chat room. I love this. It's like 250 of you. Money, cash flow, growth, marketing or HR, cash flow. I'm seeing the cash flow. Yep. Cash flow, fear. True. Cash flow, forecasting revenue, feeling good about selling. I'm going to tell you, I'm 6 years in business. Sometimes I don't feel good about selling, but I always say being a business owner is like jumping off a cliff every day. There's always some space that you're going to grow into. You're always going to be uncomfortable. So start feeling comfortable with the uncomfortable. That's part of CEO life. Jumping off a cliff. Yep. Every day. Taxes. All right. So some of you hit the nail on the head. The biggest financial challenge that I see and I hear is more sales. I want more sales. I want more higher paying clients. And when I dive into why they really want this, I get answers like this. I want to be able to hire more people to reduce my workload. I want to be able to invest in the people that I already have by giving them more benefits, 401k, health insurance. I want to be able to keep them because you already train them if you've been in business many years, right? I want to be able to invest in growth. And the number one reason why people want more sales, business owners want more sales, is they want to pay themselves more. Why not? You dedicate so much time, energy, and effort to your business. Your business should pay you something so that you could choreograph the life that you want. Why not? And I believe that in order to pay yourself more, in order to hire a team that you love, in order to invest in growth and sales, in growth and scale, you need not just sales, but you need profit. Profit is what is left over after you've operated the business. With the profit, now you could take the cash and use it in so many different ways to pay down debt, to pay taxes, to pay yourself, to invest in your personal goals, whatever those may be, to retire early, to pay for your kids' college education, to give to your community, to go on a vacation that you deserve. It requires your business to generate profits. Now, I set up the word profit here in an acronym because this represents my 6-step method that I go through in a program called the Path to Financial Freedom. I told you in the beginning, I believe business owners deserve financial freedom. So these are the 6 steps that I help business owners go through to create a 12-month plan, a 12-month profit plan to grow and scale their business in a way such that they can pay themselves more. So today, actually, I want to give you a gift. My next Pay Yourself More masterclass addresses these 6 steps. And this is how you can join us the next time. This is the link, bit.ly/PYM masterclass. This is case sensitive. It's also dropped in the chat. So click on that link, register for the next Pay Yourself More masterclass, where you'll figure out how to do this without putting your business and your team at risk, right? So I'm going to dive more into how to help you generate profits, not just sales, for your business. All right. So let's take this case study. Let's talk about Tanya, right? Tanya represents one of my clients. I always don't say the actual name to protect the integrity of my clients, right? So Tanya's just excited. She just opened her first salon and she did all the things. She set it up. It's fabulous. And she is a master, a wizard at color and cut. And for those of you out there who have natural hair, whether you do or you don't, you know, for a woman, having a good colorist and a good cut is very important. That is her sweet sauce. She learned it from her mother, learned it from her grandmother. And so that is the specialty in her business. So when I met Tanya, she focuses on the naturalista market, although she could do all the things. But when we met Tanya, Tanya said to me, okay, I want to be able to pay myself more and I need to hire more people. She's in the first couple of years of business. So I said, all right, let me look at your financials. So on average, in the past couple of years, she's gotten to generate $200,000 in sales or in income, whatever you want to call it, sales or income. And I'm like, okay, congratulations. You've done a good job. We've gotten to the 6-figure mark. Now, when we start diving into expenses, she spent about $12,000 on average in a year on labor, right? She has a receptionist, she has a shampoo person. I don't want to say shampoo girl, a shampoo person. She's paid for inventory, she's paid for supplies and all of those things, all totaling about $12,000 in a year. And then she's also spent $50,000 on other expenses, rent, utilities, marketing on social media, other professional fees, legal, all of those other things that make up the other expenses, right? So she, even out of the $200,000 that she's generated, she's left with about $138,000 in profit on average at the end of the year, right? Like successful, right? The numbers look great. So here's the reason why you don't just want to focus on sales in order to pay yourself more, because out of that $138,000, she has to pay taxes. And now I made an assumption that if she's a single member LLC, as a single member LLC, you pay taxes on the profit, not on the sales. So if we assume that she pays 30% taxes on the profit, she'll pay $41,000 in taxes on this business, except for C Corps, by the way. C Corps pay taxes as an expense in the business. It's not just based on profit. She spent $15,000 on debt repayment, right? That business credit card, you got to pay down that business credit card. We don't want to max the credit card. And she spent she's used $10,000 cash to outfit the space, to make it look beautiful and fabulous, to invest in the space. And I'm using the word specifically invest instead of spent, right? And also equipment. These are assets that she's investing in the business to expand the business. There's a difference between spending on an expense and using cash to invest in an asset. And then she parked away about $10,600, a certain percentage of the income, in an emergency fund, right? I always recommended people have 3 months of expenses. I know early on in your business, it's hard to have something stashed away, but ever since the pandemic, I say 6 months. If you could get to a place where you're keeping your debt under control and you can stash away about 6 months worth of expenses in an emergency rainy day fund, that will save your life. Okay. So growing a profitable business requires balance between spending on operations, spending on executing the service or producing a product, and also balancing all your other cash obligations, taxes, paying off debt, investing in things, right? If you have a restaurant or a bakery, what if your stove is on the fritz? Your freezer is on the fritz. You need to put cash into investing in that asset. And when I keep mentioning the word asset. So an asset is something that has extended value that if you need to sell it for cash, you can. So it's something that you own or something that adds value to the business, right? And so sometimes when we're making spending decisions, you want to either think about it as an expense or an asset, something that's going to expand the business, grow the business, add to the value of the business, or save you time, right? A VA, an assistant, a CFO, somebody that is going to add expertise and add value in the way of expertise to your business and save you time. You can also think of that person. I want people to think about me as an investment as opposed to an expense to their bottom line. So after spending all of this for operations and using all this cash, Tanya has $61,000 to pay herself at the end of the day, and her goal is to be at $75,000. So if her goal is to be at $75,000, she can't just do what she's been doing, right? In order to get from here to there, you have to think about other ways to operate in your business. How does the business model need to shift and change in order to pay yourself more, plus afford to invest in the business, plus taxes, plus pay down debt, plus the expenses, the operating expenses? So really we need to focus on what does the business need to make at the top of the pyramid in order to accomplish all of these things and meet our goals. And this is the kind of conversation that we have in that program I told you about, the Path to Financial Freedom, which is what does the business need to make and how can we grow the business in order to be able to solve and operate all of these things and pay ourselves what we deserve as business owners. So that takes me to the third ingredient for having a strong financial foundation for success, which is strategy. And I am going to talk about strategy just in terms of sales. Growing a profitable business requires sales strategy. So when we say we want more sales, what's the strategy behind those sales? So because I'm a math nerd, there's math behind everything. Everything is logical. It makes sense that way, right? And so I broke down sales into the two parts. There's price in sales and there's quantity. Price times quantity gives you your sales number. Now we can affect both things. And so you should have a strategy around the quantity part of the business of sales and around the pricing. So what are ways to affect or increase the quantity of services, projects sold, or products sold? So back to Tanya. So one of the things that Tanya did is she found a sizable market with an unmet need. Okay, there's lots of hairdressers out there, right? Lots of salons out there. She knew that it was a sizable market, but then she honed in on natural hair. A lot of us have natural hair, and even though we could DIY ourselves into natural hair care products and do things ourselves, sometimes you want to get a nice cut, and you can't do that yourself, or a nice color. So she honed in on that unmet need. And even more specifically, well, I'll get into that point in a minute. She was solving a pain and providing a solution. And she interviewed people to do so. Now, in my business, in order to understand what clients wanted, I interviewed at least 30 to 50 business owners, particularly women entrepreneurs. And that question I asked you, when I asked you, what is the greatest financial challenge? That came from those interviews. So you want to interview your test market to see if that's the right market that you want. And what is the issue that they have? What is that pain point? That thing that they can't get over unless you are the one to provide the solution. What do they need? Focus on a single offering. I don't know if you're like me, but yes, I have shiny object syndrome. A lot of us do, because as business owners, we're creative. And I'm also a creative, so that's like a double whammy. We want to do all the things and have all the revenue streams, but sometimes you just need one, right? And you might start with a number of them, but then as you're tracking sales by those different services or those different products, the market or the customers will start to reveal to you the thing that they really want and they really need. Focus your energies, time, and effort on perfecting that single offering, and then start to add other ancillary things as you learn your client market, as you learn your clients and your customers needs and wants. That will give you insight into what is the new offering that you should present out there. Capitalize on your strengths. Now, I know a lot of sales and marketing, and this is also, I also want to show you how sales and marketing ties back to the financials. A lot of the times we think of these different parts of our business as disparate things, but they all tie back to the financial core. So what is the thing that differentiates you in the market? I don't like that word differentiator. So think about yourself and what are your strengths? What are the things that you've overcome? What are the results, the accomplishments that you have had in life? What are the experiences that you have had in life that you add to your business, that you bring to your clients? In the case of Tanya, she's a natural woman, and she is a natural woman of a certain age, and which means she has gray hairs. So she wanted to make sure that her hair still looks good and is colored and not showing those grays. That was unique to her experience. And so she found a market where there was also an unmet need, and she could tie now her experience and communicate her experience to her clients and show up in a different way and really differentiate yourself. Learn everything that you can about your target customer. And I'm not just talking about demographics. I'm not just talking about age, race, color. I'm talking about what are their challenges? How do they talk about it? Who do they seek out first? I know that before people come to me as a CFO, they speak to all their fellow business owners. They speak to all the CPAs in the world because they think the CPA is the only person that can help them with the financials. They don't realize they need a CPA, a bookkeeper, and then a CFO as they grow in their business. They speak to business advisors, their executive coach, I know the behavior of my target market. I know they want to try 50 million things. I know they don't want to spend the kind of money that they spend on me. But by the time they get to me, they're so tired of trying everything out there. They just know that they want to understand their business performance, and they want somebody to strategically guide them to making the right decisions. By the time they meet with me, they are ready. I already know the psychology of my clients. You need to have that same level of understanding of your target customers and clients, so that you know how to communicate to them in your marketing, in your messaging, and you sell them what they want in their own words. I spent many years trying to tell people, oh, you should learn financials. Oh, you should want to know your shoulda, coulda, woulda. Now, my marketing messaging says exactly what the client is looking for. They don't want to feel disorganized and messy. So what do I put in my marketing messaging? Work with me, you won't feel disorganized and messy. They want to understand their business performance. Work with the Art of Money Matters. You will understand your services sold, and track your conversion. How many leads does it take to get you to a call? And does it take to get you to finally booking a client? On the product side, you want to measure how many people come to your website, how many people click whatever different items, how many people go click the cart, and then from cart to putting in their payment information, and from payment information to actually purchasing. You want to track that conversion ratio so you have an understanding of how many people it takes to reach, how many leads it takes to reach in order to actually hit your numbers for this part of the equation. So now let's talk about the other part of the equation, pricing. This is a more sensitive topic, of course. I recognize that it is a more sensitive topic because of a couple of things. In order to come up with your optimal pricing, there's different pricing strategies, and you don't have to have like a consultant come in to do this, but it just takes a bit of tweaking and testing. So in order to come up with the optimal price, you need to know your competition, right? Understand what are they pricing, how are they charging, and then look at how you're different, and maybe your pricing might be high, equivalent to theirs or higher, right? Because look, I'm a dancer and I need, dance attire, workout clothes. I could go to TJ Maxx for that. I could go to TJ Maxx, get Columbia dance skin, but I like Athleta and Lululemon, and they charge a higher price point. What makes it so that they could charge a higher price point for their garments versus TJ Maxx, right? So they probably looked at their competitive landscape. They said, we offer this and it's a premium brand, and they were able to charge premium pricing for a similar type of product. Maybe not a similar experience, maybe not similar quality, but a similar kind of product. So look at your competitors, talk to your customer. Like I said, interview your customers, see what are they willing to pay? What is it worth for you to provide the solution to solve their problem? And they're probably going to give you a higher price than you are thinking. So know your worth. Know your worth. Many business owners should be charging more than they are charging right now. And so I get the resistance. I'm afraid that my clients are not going to stay with me. I get that. I understand that. I had that fear myself. And I'm a finance professional. But you know what? It doesn't work if you don't try. You try it with the next new client. Charge a higher price. They might not even blink, and you might be like, oh my God, this worked. And you try the next price. Now, eventually you're going to get to a ceiling, but it only works if you tweak and you try it. Know your worth, know your value, know that you bring something unique to the conversation to your client, and then know your numbers. Like I said, I'm a math nerd. It comes back to a mathematical equation. There is a way to figure out what is your break-even price and your break-even sales. If you want to have that conversation with me, we're going to have to do that offline because it's a more involved process. But these are the 4 things to know in order to get to your optimal price. Know your competition, know your customer, know your worth, and know your numbers. I do a whole webinar on this in this conversation. But absolutely, this is a way to increase sales. Number 4. Yes, ma'am.
I'm looking at the time, and there are some really good questions. So I know you have a couple more slides, but do you mind if I pause, ask some questions, and then if there's time, you can jump back in?
Absolutely.
Okay, let's do that.
Absolutely.
So one question that came in towards the beginning of your presentation was, does the business credit card need to be an official business card like an Amex, or can I designate one of my current credit cards to all business expenses?
I would recommend a business credit card, and it doesn't have to be an Amex. It could be, Chase, Capital One, or whatever, but they have specific business cards because those business cards get reported to Dun & Bradstreet.
I see. Makes sense. Okay.
Mm-hmm.
Another question that came in, what are key things to consider in hiring a CPA and bookkeeper to help with accounting systems?
Okay, I have a whole blog on this, but I'm gonna start with someone that understands your industry and your specific needs, someone who has time and capacity. I hear a lot of times that, especially with CPAs, because they take on hundreds of clients, and really their job is tax planning and strategy and tax reporting. They're not always set up to advise you and give you strategic advice. That's when the next level of support, and that's actually my 5th point in this presentation, that's when you need the next levels of support, which is a bookkeeper. And in a bookkeeper, you want to make sure it has somebody, you have somebody that knows accounting and has accounting experience. Some bookkeepers just know systems. They just know how to use QuickBooks or how to use Xero or how to use FreshBooks, but they don't have accounting experience. So I've gone into clients that say, oh, I have a bookkeeper, and they're not overseeing the bookkeeper, but the books are a mess because the bookkeeper didn't know accounting. So those are the three things that come to mind right away. And then the last one is, if someone is if someone is doing your taxes, I'd rather them be a certified public accountant or a registered tax preparer, so that if you ever get any notices from the IRS, or if you have to argue in front of the IRS, that they are able to do so because of their certification.
Great. And then one last question, and then I'll let you jump back in. But how can first-year entrepreneurs cover themselves while waiting for clients to pay their invoices?
How can they cover themselves?
Yeah.
Oh, so before you get to that situation, I would say start to gather some personal savings for the first few years, right, of business. Because growth requires cash, and you need to start off with something in order to make a small investment, personal investment into your business. If you are already in the situation, what you can do to hold, when you're in that situation and you don't have strong cash flow, you don't have profits, it's unfortunately not the best time to go in front of a bank, because a bank wants to know that you could pay them back. They want to see profits. They want to see cash flow. I would say spend time trying to find ways to get the client money in the door. Offer them payment plans, offer them discounts for bringing cash in the door. Have them, work with them, be in communication with them. I've worked with a client where the customer tried to push them off to the side, and eventually I said, have your lawyer send a little email. I forgot what it's called, but it's not like saying, oh,
Yes.
we're going to court. But it gives them a little push. And then all of a sudden they got an email from the CEO saying, like, why did you have to bring a lawyer and get them involved? Because you're not answering me, sir.
Yeah. Totally. Yes. Unfortunately,
demand letter. Yes. Somebody put
a demand letter.
Chat.
Exactly.
Yes.
So Tricia, just looking at time, I think, maybe about 8 more minutes. So I'm not sure if you want to go through everything in 4 and 5, but just want to give you a sense of time. I don't want to cut you off halfway through.
Awesome. I will get through it in the next few minutes. So okay. I'm just going to jump back into a system for tracking. Biggest mistakes that I see business owners make is ignoring financials until tax time. You want to be able to measure your performance on a regular basis. They don't have insight into their numbers, and they're not tracking progress or performance. Growing a profitable business requires strategy, implementation, testing, and tracking. One of the best books I've ever read is Traction by Gino Wickman. And in there, he talks about the importance of having 5 to 10 data points, measurables that you track on a regular basis, even if you're not doing QuickBooks and all the things, even if you don't understand financial statements. Level 1 for tracking your business performance is picking 5 or 6 numbers. Usually it involves sales, cash received, cash dispersed, lead conversion. It could be a whole number of other different metrics that you use. It doesn't only have to be financial, it could be sales metrics, it could be people metrics, it could be tracking your own time that you spend on projects, but on a weekly basis, on a monthly basis, so that you know how your business is performing. Like I said, you can start off with Excel, but you can also use QuickBooks, FreshBooks, and Wave to track your financial performance and pull your financial statements so that you're seeing how your business is performing, the profitability of your business, the cash position of your business, and also your balance sheet, which shows the value and the solvency of your business. Now, many of you may say, Tricia, I don't have time for all this finance stuff, so who can I hire to manage this? Remember that you're the financial officer of your business and your life. Remember, I said that in the beginning. So at the very least, you should be tracking your cash flow. And I wanted to drop this second gift to you because I use this for every client, whether they're $500,000 or 15 million in revenue. Tracking cash flow, the ins and outs on a regular basis, super critical. I'm working with a client right now where in their industry it's been slow going. And every 2 weeks we get on the phone and we say, hey, you can cut these checks, you can't cut these checks. What are you projecting to come in the next few weeks? And it helps them avoid running out of cash so that they can make payroll and do what they need to do. So this is the link, bit.ly/AMM cash flow. Yes, it is case sensitive. Grab that. There's a little mini video tutorial in this cash flow calculator, and create. Once you open it, go to File, Copy, make a copy, have it, use it. Let me know how it works for you to track cash. That is a lifeblood of any company. And you've seen big companies in the pandemic that have fallen apart because they ran out of cash. They had lots of sales, but they ran out of cash. And so number 5 is support. Don't forget, there are business advisors, mentors that can help small business owners. Early on in my business, I went to SCORE. I had a wonderful few advisors. These are senior executives that have come and they volunteered their time through the Small Business Administration, and they have specialties in finance and marketing and all the areas that small business owners need. Throughout the nation, there's also the Small Business Development Centers. They also have advisors, mentors. They also provide some technical assistance, so they might be able to help you with some of the financial questions that you have, and maybe, you know, helping you with QuickBooks, FreshBooks, and the like. I also heard of something called TIE, Global Fostering Entrepreneurship. I'm not too familiar with that. And then, of course, colleges and universities that have small business networks. As you're going along, in your business, you're going to hire different accounting professionals and expect them to do different things. I believe that there are 5 stages of a business's growth. The first one is existence, then survival, success, growth, and then maturity. Many of you are probably in one of these 3 phases. And so I've outlined here, what should be your financial strategy? In the beginning, cash flow management, bringing in sales and figuring out how to manage those monies so that you get to a profitable place, so that you're able to manage your debt, taxes, invest in growth, and pay yourself what you want. In the beginning, you need a CPA to do the taxes and do the appropriate tax planning. But over time, you'll need a bookkeeper, someone that understands accounting, to keep your financial records organized in some sort of accounting system and report back to you, here's how your business is performing, and looking at trends and figuring out how you can course correct if there are any issues. And then over time, then you might need someone like me, an outsourced or a fractional CFO who could provide strategic advice, look at the story behind your numbers, and provide strategic financial advice for how to grow the business and how to set up the financial operations and have the right people in place in order to have a financially successful business. So that is the end of my comments for today. Those are the 5 ingredients for laying a strong financial foundation. I wish all of you luck on this entrepreneurial journey. I've been in the trenches for 6 years. For those of you in your first few years, I say keep the fight going, keep jumping off the cliff every single day. If you want to get in contact with me, my company website is artofmoneymatters.com, and you can follow me and us on Instagram at Art of Money Matters. I'm also on LinkedIn if you'd like. Thank you all very much.
Thank you, Tricia. We actually have a little bit of time for a few more questions. I definitely want to ask this one. So this is someone who's joining us who's not in their first year. And they said, I didn't keep track of my financials last year, my first year in business. How can I get back on track?
How you can get back on track. So the first thing I would say is make sure that you have a separate business bank account and separate credit card account. So establish those things. If you have those things, I would say set up an accounting system like a QuickBooks, like a Xero, and there's a feature within there called bank feeds. So connect your business bank account, all your business bank accounts, your business credit cards to bank feeds. And what happens is all your transactions will start to flood into this depository. And then you can have your bookkeeper or an accountant or someone categorize those transactions into the right buckets, into the right income, expense, asset, liability, and equity buckets. If you don't know about those 5 things I just mentioned or what the difference is, then you definitely need someone that has accounting background to set up the QuickBooks or the Xero or FreshBooks properly in order to do that. So I would say start, we're only 2 months into the year. And so when you set it up and you connect the bank feeds starting January 1st, 2021, 2022, and then have someone do the accounting for the past couple of months and get you on the right track.
Great. And then last question I like to ask everyone, if there's one thing that people remember from your awesome presentation today, what would be the one thing you want everyone to take away?
Oof.
Tough, because you had 5 key points.
I know, I was dropping some jewels and gems.
You really were.
I would like to know from the audience, what were their takeaways, actually?
Oh, that's a
I
great
would love
question.
to know, yeah,
Let's
what were
see.
your takeaways from this presentation? If it was one thing, you are your own, yes. Hey, Erica, how are you? Erica's a Tory Burch Foundation fellow like me, myself. Pay yourself, yes. 6 months of savings, jump off the cliff.
Jump off the cliff. There's a few of those.
Ask for help, have a strong core. Yes. You are your own CFO. See, look, I said all the things about banks and credit cards and profit and and you see what people remember? I love that.
But people don't commingle personal and business finances. I think that is really key. Building that business line of credit. Great.
That is.
Some great stuff here. Well, Tricia, thank you so much for always for coming back and for sharing your expertise.